Well, let's get straight into it. Improved mood, that's about, and of course all ahead of what's to be expected at the EU summit tomorrow. What are you making of the kind of sentiment that's doing the rounds right now?
Well, I think the sentiment is actually, on the whole, really quite positive. Let's start with the currency. You know, the euro has been building up very nicely. It looks like it even may have a run towards $1.40, which is quite a strong level in the top of a trading band we've had for some time. That's a positive view if it's moving in that direction. Best of all, the correlation between the rand and the euro exchange rates against the US dollar is quite a good one, and that may say, hey, we can look at a slightly better rand as well.
Of course, local markets taking a lot of that directive from what's playing out in global markets. Yes. And yes, we've got the EU, stealing much of the attention. But having said that, earnings season in the US also cropping up as a strong factor to consider. And I was saying earlier, of the 142 companies in the S&P 500 that have reported, we've had 68% having topped Wall Street estimates so far.
That's very positive indeed. And, okay, there's 140 companies out of 500, but I think that's a good indication of the direction that they're going in. The US is not heading for a recession right now, not if we look at corporate results. If they just stay where they are, they're going to bumble along at a sort of 1 to 2% growth rate. That's very positive. And I think if we can look at this here, the chart of the S&P 500, the top 500 companies quoted on the New York Stock Exchange. And if we go back to look what happened here, from September last year, all the way through to April, May, it was a strong momentum, strong growth trend, and then that sideways consolidation at the top broke that rising trend line, broke the baseline, and wow, the bottom fell right out. 1,250 to 1,100 in just about a month and a half. But look how it's been building up. And is it going to test the base of that level again? Well, if we look at the results, it's possible. Yeah. I think that's quite exciting, and that says it may be more good results, maybe even at an increased rate. If that is so, the confidence worldwide will be positive, and the world equity markets will follow that.
As we said, though, a lot hinging on tomorrow's summit. So let's bring that back into the foreground. So what are you anticipating there? Because we've had a lot of, time and time again, these deadlines having been set and just not having been met.
That's true. But, you know, there's been so much sort of preparation. We know now that a lot of the banks are prepared to accept not a 50%, but maybe a 60% haircut, right down of the value of sovereign debt. Wow, that's a heck of a lot. The big factor comes in, can the banks that hold those instruments afford to take it? Well, I think they've had time now to juggle their balance sheets to see that they can. I think that it'll have to go, because if it doesn't, we can't face the prospect of a dissolution of the euro system.
Yep, of course, it's all of that that's been influencing the kind of activity we've been seeing in our resources space specifically. Yes. And let's bring it back to home ground here, because Blackrock, which is the world's largest money manager, seeing massive opportunity, it says, in oversold mining equities. But having said that, going further down its statement, and you highlighted earlier, a contradiction emerging in that it still sees the risk level for mining equities too high. So what does that mean? Do you delve in, or do you stay out?
Well, you know, Blackrock are a pretty substantial investor, $3.25 trillion. That's just about the same as China's total reserves. Wow, they're people with a lot of momentum behind them. I would say that they're saying it looks interesting, but they're not ready to jump in just yet. But if we see any good economic data coming out of China, any better, or the US picking up just a little bit, or the EU making friends with each other, then I think that maybe that'll be the sector to look at.
Yeah, certainly we've had some investors looking at it keenly this week, and we hone in on the platinum sector specifically. I mean, it's down 25%, over 25% this year, making it one of the worst performers amongst the blue chips. But if you're looking at a player like Lonmin specifically, I mean, it was up close enough to 4% yesterday. Today trading a further 0.75% to the good. So seeing some impetus starting to creep back in.
Yes, it's a small jump compared to how far it fell down. But it is just saying that there's a positive feeling that China is going to keep on at a reasonable growth rate. If that is so, the huge demand they have for vehicles and so catalytic converters, the fact that they do realize that they have to move towards cleaner air, I think that's quite a positive outlook. And if it comes about from China, we're going to see it in our platinum stocks.
What about the prices themselves? Because, okay, you've got platinum that sees some of that demand and industrial demand coming through, and that, you know, propping things up on that end. If you're looking at gold, there's been a huge debate on whether or not there's actual fundamental support for that gold price. And today, Anglo Gold Ashanti CEO Marco Tufani coming to the fore, and he's saying that he doesn't see gold prices in a bubble, that he does see fundamental support. And which, you know, for that price right now, which side of the debate are you sitting on right now?
Well, I suppose what one can first of all say, Marco Tufani would be positive in any way.
As would any gold
CEO
miner.
of the third biggest gold miner in the world. But nevertheless, you know, gold has always been and always will be the ultimate currency hedge. We're just not even if there is an EU agreement, there's still going to be huge volatility in currencies, and there will be a need for a hedge. Gold is, as I said, that ultimate hedge against currency volatility and against inflation. There's a strong need for it there. There's also getting towards the last quarter of the year. We're in the last quarter of the year. It's the Indian marriage season. A lot of festivals and ceremonies where they have gold as gifts, as presents. And I think that that will be good for sales in the short term.
In fact, we've got Hindus all across the world celebrating Diwali tomorrow.
That's
so
right.
That's a big festival that you know, Indians out there are looking forward to. In the meantime, let's look at a sector that's not doing as well, and certainly we can't find many that are very bullish on it as well, aside from the few value investors, and that the construction space. Esau Frankie out with results today, 195% drop in its earnings coming through there. But then, having said that, revenue increasing 14% and also boasting quite a nice order book as well, up 50% to 1.5 billion rand.
Yes. Well, as long as they've got the margins right, that's okay. But in the past, so often they've said, hey, we've got no business. We'll trim the business down. We'll make it more efficient. We'll take on these contracts because we know we should be able to operate them efficiently. Now, I'm not sure if this is going to work. You know, what you also have to say is public sector. There's no fixed capital investment. Since the World Cup, Football World Cup, there's been very little anyway. And the same applies to the private sector. There's excess capacity. If you've got capacity underutilization, where are these big projects going to come from? From South Africa? No. Going into the rest of Africa? High risk. I would say,
but
yes, they bombed out.
But it is something that Esau Frankie is pursuing. I mean, reading through those results this morning, it did say that it's pursuing ahead with that sub-Saharan African strategy pretty aggressively.
And we must be there. We have the experience, we have the ability both technically and from a financial management point of view. So, yes, but I'd just like to see a little bit more stability and a bit turnaround.
So safe to say you're not delving into the construction space just yet?
No, I don't have that risk profile.
Well, we'll leave it there. I mean, certainly Mark Ingham of Ingham Analytics agreeing with Ian's position this morning, saying that for those that are delving in, well, good luck to them. Ian, thanks so much for your time this afternoon.